Hi, I'm Nayantara Rai coming to you from the HCL boardroom. It's a day of big earnings, isn't it? HCL Tech, Reliance Industries, as well as TCS. Joining me, of course, is the top management of HCL Tech, C. Vijay Kumar, the president and the CEO, and the CFO, Pratik Agrawal. Gentlemen, congratulations. A good set of numbers. CV, I'll come to you first. I remember 2 quarters ago, I was asking you, aren't you being too ambitious about the guidance? You maintain the guidance, but you have narrowed the band down, and that too towards the higher end. Yes. Why the confidence?
Yeah, I mean, we've been delivering very well. We've had some very good bookings in the past few quarters, and that is translating into revenue. In fact, I think when we announced our guidance, you said, is this the first time you're going to miss your guidance? You're so optimistic, but we not only maintain the guidance, we up the guidance. Now we're going to be at the upper end of the guidance, which is 16.5 to 17%, of which 10.5 to 11% is the guidance for the organic growth. So we've had a very strong momentum in all our businesses, and that's what is driving this. And of course, as you've seen, we've hit 10 billion revenue run rate on an annualized basis, which is again a great milestone for all HCLites.
Yeah, that's a big milestone, the $10 billion annualized revenue. I was going to come to that. Okay. But CV, tell me something. You've got 1 quarter left now.
Yes.
You're narrowing the guidance range in towards the higher end. Would that allude to the fact that you've got a healthy deal pipeline?
Yes. Our pipeline is very strong. In fact, it's at its peak. And we also are very confident.
You mean in the company's history peak or in this, in this year's peak?
In this year, because I don't have a good track of many years, but in the recent past, it's one of the highest in terms of our pipeline, and we believe there is, we expect a very strong conversion of the pipeline this quarter based on all the conversations that we have been having with our clients. So that gives us the optimism to be at the higher end of our guidance.
Okay. And if I could come to you, Pratik, completely out of your hands, but the currency situation, and you're going towards a lot of volatility as well. You can't do much about it. But tailwinds?
No, but it's not the...
You'll have headwinds, actually.
No, so currency is not something we worry about too much. I mean, we have a very disciplined hedging program, which kind of takes care of it, give or take a few bips here and there. But when you talk about currency, we have a lot of currency flowing in this quarter. Okay. And I'm talking about the solid cash conversion of those revenue and EBIT numbers that CVK talked about. More than $700 million operating cash flow in the quarter. And for the 3 quarters cumulative, we've delivered close to 110% of the net income. Okay. So we are generating cash like never before. Okay. And $650 million of free cash flow after paying for whatever capex we had during the quarter. So much so that the cash balance, the net cash balance on the balance sheet is now $1.1 billion. And further to back it up, we have a S&P credit rating, the global S&P credit rating. We have got a A- credit rating. Which, mind you, compared to the India sovereign credit rating at BBB- is 3 notches on top.
Yeah. So then let me ask you this, Pratik. You've got that kind of cash on your books. I'll take the dividend that you've announced today. But the fact that it's a proud moment for HCLites, look at the analyzed revenue, the cash you have on your books. What about the cash utilization policy?
So cash utilization, I mean, the $1.1 billion is great, but we will continue to generate much more. Out of this $1.1 billion, we do have a payable to IBM for the acquisition that we did. The second tranche is due end of June this year. So $800 million will go off in that. Okay. And we'll continue generating more.
Okay, I take that point. So, CV, let me come to you, and he has put it all so beautifully about where you guys exactly stand, the strength of the balance sheet. You've talked about the healthy pipeline, the deal flow, all of that. But let me ask you a question that will I be asking you in January that how did you beat your guidance?
I will stay with the guidance of 16.5 to 17.
You're not being conservative. I completely changed my story 2 quarters later. Am I going to be asking that question in January?
Comments,
He does
I'll
have
be very
an
happy if you
envious,
do that. Yeah.
envious track record, right?
Okay. What about M&As? Now with what the book,
Yeah.
etc., is looking like, you relied very heavily in the past also on inorganic growth.
I think if you look at the industry, Nayantara, it's going through a lot of transformation, right? And this is the time you really do all your right investments, invest in the right technology, organically acquire competencies inorganically, also create completely new revenue streams for the future. HCL has always been thinking disruptively, like the production platform is something nobody really focused on, and now we've built it's 13% of our revenues comes from production platform at a very high margins, right? So we're always looking out for new ideas, new
But
ways
new
to grow,
geographies?
new geographies as well. I think we expanded in France, Germany, we expanded in Canada, we focused a little more on Middle East. Now France is a big focus area now this year, so we'll continue to look for acquisitions to expand geography, expand some digital capabilities, and of course if there are right opportunities on the intellectual property acquisitions that we did, we're always open to look at it.
And when I look at the mode 1, mode 2, mode 3 mix, is it according to script?
Yeah, it's exactly, we wanted it to be 1/3 of it,
Well
and we are
said.
at 34%, so 1% of the script.
Is this the way it's going to stay? You got the way it is at the moment?
No, I think it will move a little more towards mode 2 because
Because that has always
that's
been what you've spoken
that continues to grow at, now it's grown 25% year on year, so that it'll kind of increase a little more in mode 2, and mode 1 will reduce as an overall percentage of our revenues.
Pratik, can I ask you that within the segments, what have been the outliers, and are you seeing more traction now in BFSI, or is that still a trouble spot?
BFSI continues to be a bit of a slower compared to the other verticals. That's also grown about 4.5% year on year, etc. But compared to the others at 38% and 31%, those are smaller numbers, obviously.
Yeah.
So that is, we talked about one of our client-specific issues, and even generally, I think that market has been a little slower. CVK might want to add.
Yeah, I mean, if you look at the financial services, obviously on the retail side, there seems to be a continued focus and momentum. And there are a lot of fintech companies or financial software companies where we think there is going to be opportunities, but some of the traditional spaces like capital markets are continuing to be a little bit stretched.
So then what are the sectors that are doing well for you?
Manufacturing is doing very well. Our public services, energy and utilities doing well. Life sciences and healthcare from a year-on-year basis has almost grown double-digit. Retail CPG is again a very good momentum. A lot of digital work that we are doing is coming from the retail CPG segment. That's pretty much it.
It's going to be election year.
Yes.
How is that going to have any impact, you think?
Nobody can say.
Is something that you'll have to talk about
I
at the
think
next board meeting?
right now, if you look at our pipeline, it is strong, and we think a lot of good conversions will happen. So we have to take it as it comes. I cannot really provide you a view on that now.
Okay. And the trade war, I guess you will not want to talk about that either.
Yeah, I mean, it obviously it impacts some of our clients, and that might impact us. But all that is baked into our revenue and EBIT guidance. With one quarter to go, not much of variation is really possible.
You wanted
No,
to
it's the trade war has started to thaw out a little
you've
bit.
seen
So
the
phase
first
1
phase,
at
yeah.
least.
It's
So
moderating.
hopefully it will get better
Yeah.
as it goes to the phase 2 and so on and so forth.
So you can make this my final question. You can provide us with insight.
Sure.
If there is a change in sentiment, investment ideas, conversions and all of that, simply by talking to the client side. Has that happened? Is there a significant change?
No, I think I always look at these questions, looking at how does it impact HCL, and the best way to look at it is your pipeline healthy? I said our pipeline has been now is the highest in the recent past, and I'm also confident of good conversions in this quarter. So I am not
when
really
you say
seeing
highest, can I just interrupt you there? Sorry.
Yeah.
Is it highest in the numerical aspect or in the qualitative? Is it qualitative or quantitative? Basically?
Both. I mean, numerically, obviously, I'm saying highest. It is because numerically the highest in the recent past.
And the value?
And the value as well. I mean, and that the best way to look at that is how much of deals are in the new age spend. So every large deal has significant transformation component, which means we are becoming much more strategic to our clients. We are not only just focused on run the business spend, but we are also equally engaged and really contributing to the transformation of the client landscape and continue to optimize on the run side.